Yo, what is going on, family? Welcome. Happy Sunday. Listen, I want to give you guys my one tool that I used this week that absolutely helped me nail the markets. Um, and I'm going to show you that right now. So this is going to be a standard deviations video. There's a lot more to it. So this is a small piece of what I use, but I want you guys to understand how I went into the markets with this tool, and I was able to have clear targets despite of prices moving wherever it wanted. And so let's go to the charts. And first thing you're going to need is going to be your fib tool. So grab your fib retracement. I'm going to show you my settings. Go ahead and copy those, screenshot that if you need to. Let me scroll down, screenshot that if you need to. Once you have all of these settings, go ahead and pause the video, put your settings in if you want to follow along. Once you have these settings, we are ready. Also, make sure you save this, save as, and then call it whatever. So mine is just standard deviations, optimal entry, etc., etc. Great. Once you have that, let's figure out where price is going and how we're going to measure manipulation moves. I am looking at manipulation moves in a form of SMT. If you don't know what SMT is, simply, it's just an asset making a lower high and the other one failing to make a higher high. Or sorry, the other one making a higher high. Basically, just divergence between assets that tells us, hey, listen, there might be something coming up you might want to just pay attention to, right? So if I'm going to show you what that looks like, very simple form, it's going to be boom, 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 right? And then you have another asset that does this, right? Boom. So then you can see we have, this would be a bullish SMT right there. Sorry, right here. And then right here, right? This one making a lower low and this one failing to take this low. So that's how I'm looking at SMT divergence, right? And that's honestly, that's all you need to know. And there's going to be times where it's super clear. There's going to be times where it's not clear at all. You are going to need two assets for this. Meaning, if we're looking at NQ, which is what we're trading, I'll probably end up looking at ES for this, right? So let's just take a look here. I know that we had one here, so I'm just going to show you what that looks like. So right now, if you look at the lowest low that was put into this leg, right? It's right here, and then we have a higher low and a higher low. So there's no SMT here, right? There's no SMT here. But if you're smart and you caught this, you have an SMT here. So how come we didn't get an SMT here? Well, we're looking at ES and NQ. Maybe YM gave us that SMT. Let's see. There's our low point, and then look at this. Like immediately I can already see we have SMT all over. YM gave us this SMT there, and then this SMT basically all of this. It's not super clear. Do you see what I'm saying? Like it's not very clean. So what about RTY? Well, RTY gave us a cleaner SMT, right? Between this low here and right there. So you can see we have a low and then a lower low and then a lower low. So you can see now we have SMT here. So there's multiple SMTs, right? And then that's all I'm going to show you today as far as well, there's more, but there's more that goes into it, like I said. So don't just use SMTs. You have to stack probabilities, right? And so I stack SMTs with a high time frame POI, with a sweep, manipulation, and then I look for a target, then I look for a CISD, and then I look for my entry. But I'm just showing you the power of standard deviation. First, you need to figure out what where you can find SMT. And so now that we know what SMT is, it's just divergence between assets, correlated assets. We can look for that manipulation leg. So we know that there is SMT here. We know for a fact, we've found it, we've seen it. There is SMT here. If that is true, if we do have SMT here, right, then our last swing high before that failed swing low that gave us if this wouldn't have failed and then this did, that would still be SMT. But since NQ gave us a failed swing low, this is our SMT leg from here, or sorry, our manipulation leg from this high to this failed swing lower low. right? So what we're going to do is take our fib tool, right? With the settings that I gave you, we're going to measure not this point, but the manipulation leg from the swing low in this case to the swing high, right? And that's going to give us our standard deviation targets. I'm always looking at -2 to -2.5. Anything around there is my first target. So if I mark that out, let me make it like so that we don't miss it, right? We don't miss any of it. Red. Come on. Oh, red. And then my next target is, if we want to get there, is this one. And I only target -2.5 because I know that it is the most probable target. If price wants to turn around, it most likely will turn around at -2, 2.5. But I must see another SMT with manipulation, with a change in the state of delivery, with a high time frame POI, right? So let's see. So then we get this SMT, cool, right? We get on the second SMT right here. You could have gotten in, cool. And we just let price ride. Let's just see what happens. So this is 11, 12, 2, 3, right at 4, right at close, we meet -2 standard deviations. This would have been an all-day trade, right? Now, this is a massive trade. If you are taking this, right, let's just say you get in here, stop loss, take profit -2. Oh, let's just say you do a single con, like a single con. That's $5,000 target. That's not a bad trade. So, but it is an all-day trade. Anyways, I just want to show you what that looks like, right? So now what am I expecting? Are we going to continue playing this model to -4 standard deviations? I don't know, but I can be aware of it. I can now see and look at price and say, well, yeah, this might play up here. Is there a reason to play up here? Well, we got this high here, right? We've got this high on RTY. We have this high on NQ, which is pretty close to that target. So there is a target there. But do we want to go there? I don't know. So I'll be paying attention, looking for signs of a continuation or signs of a reversal to go lower here, right? So I'm only playing what the chart is giving me. But this way, I'm not blindly looking for entries anywhere else. I am just looking for entries inside of these zones, right? According to what standard deviation gave me. So I hope that was helpful. I hope you can learn to understand what that looks like. I know there's a lot of questions on this. This is ICT quarterly theory kind of trading. And there's a lot. I get that, but I just wanted to make this video out here for you guys so that you can see how I'm using this, so that you're not just jumping into trades wherever. You can see the reason and why price is going where it wants to go. For example, I know we have, here's another SMT here. I can already see this swing high, failure, swing low, and then this took this low here. So this is SMT. If I measure that from here to here, from this low to here, you can see -2 lands right here. We tap into -2 perfectly right here, then come down, then move up into -4, 4.5. So then I can be like, oh, cool. This is what I was looking for. I was looking for a short here, right? I did get stopped out, but it was a valid entry. I was looking for it at the right place. And then I was looking for another short here. I did get in earlier, ultimately, but this was super sloppy, but we did get that SMT. I know that we have an SMT from here to here, like this, right? Making this right here a manipulation leg to the downside, right? We don't tap -2 right away, right? We don't tap it yet, but we consolidate. Eventually, I think this was overnight. Yeah, in the morning, we tap -2, ultimately tapping into -4 right there. So that was, and that's how I'm looking at it. And then once we tap -4, I was actively looking for this long. I did take this long, and then I took it right here somewhere, right here, I think, because I missed this entry. I took it, I let it play out. I was about to close it, but ultimately it played out because it was just super late in the day. But you can see how I'm aligning my just what the price is giving me. And then if I put my bias on top of this, I can know where I'm going. And I need to be careful if I'm going against my bias. But as long as the chart is showing me that, hey, price is wanting to do this, I'm going to follow what price is wanting to do, right? Even in this chop that we had all of this past week, right? Like all of this is just chop, right? We're just trading sideways. But you can see I was able to find targets, valid targets with what the chart was showing me, not what I wanted to see. So I hope that helped you. I hope you get some insight with this. If you have any questions on standard deviation, make sure you join the Discord link, first link in the description below. Also, guys, please, please, please make sure you like and subscribe. It helps a lot. And if you want to see more videos like this, let me know. If you have any questions, drop them in the comments below and I'll be sure to get to them as soon as possible. Anyways, have an awesome day. We'll be doing some live trading on Monday. And we'll catch you guys later.